Do you folks remember that in my previous video, I talked about the magic number for CPF balance to be 60,000, and some of you have many questions like why 60,000 is the magic number, right? So in today's video, let's elaborate on this topic on getting higher interest on your CPF balances, because $60,000 is the optimum number, but not the maximum number. And I will elaborate and talk more about the interest rates of CPF, how are they calculated, and what's the best way that you can earn the most out of your CPF balances. Now, I would like to start with some facts about CPF interest, right? How is it actually calculated and accrued in terms of the interest? CPF interest is actually calculated and computed monthly, but it's only credited at the next year, 1st of January. So the fact is, even though you don't receive the interest in your CPF balance every month, but it's already compounded for you automatically in the background. So that's good, right? But there's one very important fact right here by the CPF is that your contributions received this month will start earning interest the next month, and withdrawals and deductions in this month will not earn interest from this month onwards. So what this sentence means is that whatever you receive this month will not be computed for the interest. Only the next month then they start to calculate. And if all this sounds too difficult or too chim for you to understand, then at least I have something easier for you to understand from my sponsor. I know that some of you have missed the chance to get your free kopi from Mumu last month, and so did I, because this time round inflation has caused my coffee to increase price by 10 cents, and inflation is a necessary devil, right? So how to fight inflation, you may ask, and that is by getting free money. How to get free money then? It's very simple. Just sign up using my referral link for your Mumu account, then deposit at least $2,700 to get a chance to spin the stock wheel, and you can get up to one free Amazon stock. Then next, you know what to do? You may take out a sum of $100 out of your cash deposit and start a Mumu Cash Plus. Now, once you have invested at least $100 in Mumu Cash Plus, you'll get a daily cashback coupon of $2 for 30 days. And you know, $2 times 30 days, that is $60 worth of free money. And I can give you 4 very specific reasons why you should use Mumu Cash Plus. Firstly, there's no monthly negative return to date. Secondly, with the rising interest rate environment, there is potential earnings from this. Next, the process to subscribe and the process to redeem it is really fast and quick. And lastly, there's potential income daily, even on the weekends. So this is how I will use Mumu Singapore and Mumu Cash Plus to fight inflation. Anyway, the CPF boards just announced recently that they will be keeping their CPF interest rate the same until the end of year 2023. So for those who hope that CPF interest rate will increase with the rising interest rate, then you are in for a disappointment. Because do you remember that during the pandemic, when interest rate was cut to almost zero, CPF is still paying really high interest at 2.5% OA and 4% your SA and MA. So you cannot have your cake and eat it, right? When there are low interest rates, they are paying you high interest rate. Now they are higher interest rate, you cannot expect them to adjust up at the same time. You cannot eat from both sides one. There are no such thing. It's either you stick to the fixed one or you just follow the interest rate law. But do you really want that? Do you really want that unstable interest rates, or do you prefer a fixed interest rate throughout? That's not for me to answer, for you to ask yourself. Okay, let's go to the main topic of how to earn extra interest on your CPF. And let's start with the age group that is below 55, because below 55, you are not considered a senior citizen. And to put it very simply, your special account and your MediSave account will both earn 4% annual interest, and then your ordinary account, which is your OA that can be used to pay for your housing, your investing or education, is earning 2.5% per annum. The good thing is there is a bonus interest of 1% applied on the first $60,000 worth of CPF balances, capped at 20,000 OA. What does that mean? It means that whatever CPF balances you have, your first $60,000 will get 1% additional interest, but you have to be very careful about that ordinary account cap of 20,000, because any OA above 20,000 will not grant you that 1% bonus interest. So you want to make sure that you keep at least 40,000 of combined funds in your special account and your MediSave account, such that 40,000 SA or MA add to your OA comes to $60,000. What if on the other case you have $0 in your OA because you transfer everything to your SA? Then maybe you have $60,000 worth of combined special account and MediSave account. This will get your additional 1% bonus interest as well. It doesn't matter whether your OA has money or not. OA is just a cap. OA does not have a minimum for you to earn 1% annual interest. So you will have to debunk this misconception that people need to have 20,000 OA. No, you don't see. You just need 60,000 in your combined SA and MA, then you can get the 1% bonus. So let me give a negative example to this, right? What if you have 40,000 in your OA and 20,000 in your SA and your MA? That means that your 1% bonus interest will only be applied to 40,000 of your CPF balances. Then you may ask why, right? That is because it's capped at 20k of your OA. So they only take 20k from your OA to do the bonus interest calculation. And then your SA and MA only have 20k, right? Then only 20k from OA plus 20k from SA and MA, total 40k. Okay, you're missing out that 20k. So what you should do here is you transfer 20k from your OA to your SA. So it becomes like your OA is 20k, then your SA is 40k, right? Then you get a maximum bonus interest on that 1%. So you see, this is why your magic number of $60,000 in your CPF is very important. And that's just for the age below 55. What about people above the age of 55? Now you see, for people above the age of 55, they are always still earn 2.5%. SA and MA will earn 4% as well, but then they have an additional account called the retirement account, and the retirement account will earn 4% as well, so that's very good, right? But you see, the magic number has not changed, but the bonus interest for people above age 55 has changed, because their first $30,000 will get additional 2% bonus interest, and then the next 30,000 will get additional 1%. Of course, it is still subjected to $20,000 cap in your OA, so you want to make sure your OA don't exceed 20k. You want to have maximum in your SA and your MA or even your RA to get the additional 2% or 1% bonus interest. This is why the CPF board has mentioned that you can get up to 6% CPF interest, because you see, your special accounts earns you 4% annual interest, right? Add on to the 2% bonus interest for your first 30,000 balances, that would enable you to get 4 plus 2 equals to 6% CPF interest. So for those of you who have too much in your ordinary account and then you have very little in your SA, your MA or your RA account, then maybe after the age 55, you can consider transferring some of your ordinary account balances to your retirement account, because after 55 you cannot transfer OA to SA. You can only transfer OA to RA. And some of you may have this question: why do they need to keep the OA cap to $20,000 for bonus interest calculation? Now let me answer that for you. That's because OA savings are short-term in nature and can be withdrawn on demand for a few purposes such as housing and education. So what the CPF board is trying to tell you is that OA is more for short-term usage. You can use it for housing, you can use it for investing, you can use it for education. So it's not like long-term retirement funds for your ordinary account. That's why they want to cap it at 20k. They don't want you to put in so much in your OA. They want you to transfer to your SA for retirement fund building purposes. And that's what it's supposed to be, right? The CPF is for your retirement. It's not for you to use it anyhow on your housing, on your investing. All this you can use your cash to do it. You don't need CPF to do it for you. So then, what is the real method to really maximize your CPF balance for the bonus interest? I think I mentioned it several times. One way is to actually transfer your OA to your SA if you are below 55, and transfer your OA to your RA if you're above 55, because your SA and your RA both earns you 4% per annum interest, whereas your OA is only earning you 2.5%. And also, for you to escape that 20,000 OA cap, right, you want to transfer more into your special account or your retirement account, so that whatever they cap that OA at 20k is none of your business, because most likely your special account and your retirement account has reached above the 60,000. Then those are eligible for the bonus 2% or 1% interest depending on your age group. Now, the other method for those people who do not prefer to transfer their OA to your SA or your RA, right, because they want to keep the OA for housing, for education, for investing, no problem. All you have to do is just do retirement sum top up or voluntary contribution to your MediSave account, because those ones will go directly into your special account, your MediSave account or your retirement account, which are all gaining you 4% annual interest instead of the OA gaining you 2.5% interest, right? And at the same time, you do get some tax relief when you do those retirement sum top up or VCMA voluntary contribution to MediSave up to $8,000 per year. That's a CPF tax relief limit. Of course, if you are above 55, then you can do the retirement sum top up to your retirement account, but only up to the FRS, then they can give you the tax relief. If you top up beyond the FRS level, no more tax relief for that. So you have learned about this CPF balance magic number being 60,000, and also how you can earn extra interest on your CPF balances. But next, you should consider whether you should do retirement sum top up to your SA or voluntary contribute to your MA first. Then you should look out this video over here, because I compared the differences between these two so that you can make a fairer comparison of which one to top up for.